Hello traders, this is Blake Morrow with ForexAnalytix and you're listening to the week ahead video for July 28, 2019. Hope everybody's having a great summer thus far. I know I haven't been with you guys a lot of this last week, especially for those of you that listen in to our daily webinars. I've been traveling, and so that leaves us a great opportunity because it's going to give me an opportunity to actually freshen up some of our charts with you. Even though we do have analysis, obviously, from the rest of the team on the ForexAnalytix platform, I actually wanted to do a little bit of work myself with you guys here today. Now, before I get into that and I get into what we're looking at for the week ahead, I want to make sure that I mention that if you haven't tried out ForexAnalytix, that you do so. It's only $1 for 10 days. Try it out, and all you have to do is click right here in the middle where it says sign up today, and it's only $1 for 10 days. And then once you try it, also download the mobile app, get it from the App Store or the Google Play Store. Make sure you put it on your mobile platform, or even your iPads or your tablets. This way you have our analysis on the go if you're not in front of your computer at all times, which I don't think any of us are 24 hours a day. I know some of you feel like it, but anyway, make sure you download the mobile app. All right, so like I said, we have all of our analysis from our team that's on the ForexAnalytix platform. And even though I did analysis throughout the course of the week when I was traveling, I was actually out of state as my son was at a goalkeeper training in Wisconsin. Yeah, it was a big one actually. It was almost 300 goalkeepers from around the world were out there training. It was pretty cool. It's fun to watch for those of you that are soccer or football fans if you live in Europe or anywhere else in the world. Anyway, like I said, I did a lot of the analysis, but I didn't do the weekend analysis. But you can all read it through here, all the updates. I believe Paul Franco is doing some updates right now as we head into the open. But you know, if you look at the euro dollar is actually at a really key level and a really key support, and that's ahead of this week. This week we've got a lot of, well, we have several central banks that are meeting. We have the BOJ, we have the Bank of England, but most important is obviously the FOMC on Wednesday. And you know, there's a risk that the bears, the dollar bears, are a little disappointed. You know, the market is looking at a rate cut from the Fed on Wednesday. And actually, let me take a step back. You know, when you talk about the Bank of England or the Bank of Japan, we aren't expecting anything new from either one of those central banks. But it's all going to rest on the shoulders of the Fed on Wednesday. Like I said, I think there's a risk for dollar bears to be disappointed, and it could lead to a continued rise in the dollar. And that's important to understand because if you look at the euro, and I'm just going to show you this chart really quick. The euro came out of this descending wedge. You know, we were in this descending wedge. It was a pretty aggressive move that came out. We only rallied to the 38% retracement, which for me is a little surprising. Usually when you come out of a descending wedge, I tend to look for more of a 50% or maybe even a 618 retracement out of a big wedge like that. It was only a very shallow retracement to about 38% retracement, and now what we're doing is we're coming back and retesting the wedge and also key support here at the 111 level. Obviously, a break below 111 opens up the downside for at least a 110 test, maybe even lower than that. And the reason why I can say even lower than that is because I'll take you over to the dollar index where I'm going to do a little bit of work with you here in a few moments. But notice a couple things. See this relative strength. Okay, see that uptrend in the relative strength. See how it broke down? Because it broke down, that leads me to believe that the risk at this point is for a continued move lower in the euro below 111. Now, the market obviously is pricing in for the Fed to cut rates this week, and the Fed's probably going to cut rates a couple of more times this year, probably 3/4 of a basis point moving forward through the remainder of the year. Is there a risk that the Fed could cut even further and or be more aggressive? Sure, and that is a risk. But I think the risk is that dollar bears are maybe you know, disappointed, and that could lead to a further squeeze in the dollar index. Take a look at the dollar index. And I'm going to tell you guys, I've been trying to trade the dollar on the short side, and I would say successfully over the last several months. I've been, selling the dollar as we've been up here against this major. Now take a look at this major 618 retracement. This is a weekly chart, so let me put on a little bit different fib level so you can actually see how important this is. This is a big 618 retracement. We've knocked our head up against there. We had like this little double top on a weekly basis, a couple months ago, and trading the dollar back to the short side, it worked, and selling rallies was okay, and like I said, I've made some money doing it. But what you'll notice here is that we are pushing right up against that resistance again, and frankly, a break above these highs right here. Okay, let me take the magnet off. The break above these highs around the 98.30 level in the dollar index immediately, in my opinion, points to a 100 test in the dollar index, and maybe even up a little higher than that to the 78% retracement. Also, take a look at the weekly RSI. Do you see this? If we start breaking higher through this resistance, that RSI is going to poke its head higher as well. And like I said, I think the risk could start building for an upside move in the dollar. And so this is all very critical. Obviously, Wednesday is it. I mean, Wednesday for the Fed. If you guys you're like, oh man, it's summer and I don't really want to trade, I don't really want to be around all week. I get it. A lot of us have been on vacation. You might be vacationing right now, but if you can be in front of your computer during the Fed meeting on Wednesday, which is the 31st of July, I think that's the day you really want to be in front of the computer, because if you think about Thursday with the Bank of England, what's the Bank of England going to do right now? Facing Brexit, they want to raise rates, but they can't. The Bank of Japan's kind of got their hands tied. They're not going to do anything on Monday night, going into Tuesday morning. So really, it all is going to lay on the shoulders of the Fed on Wednesday. Now, also, I should mention, obviously, it is the first of the month. So we're going to have non-farm payroll on Friday. So, Wednesday, Friday, if you guys can be in front of your computers, I think those are going to be the days that you really want to be. But obviously, Wednesday is going to be very pivotal. And I think Friday is going to, if the dollar is strong going into the weekend, and then we get another better than expected jobs report. And I know the jobs reports haven't been anything super exciting, but if they're not disappointing and we have a rally in the dollar index going into next week and we start breaking some of this resistance, any decent number is just going to accelerate that dollar move higher. Now, with that being said, what I should do really quick, since we're looking at the dollar index, let's get this last range. You see that double top that we have here, and let's bring this this fib down all the way down to the lows that were set in June, okay, last month. And you can see the 127% extension of this range here takes us to 99, and then beyond that, the 161% extension takes us really close to 100, or what you could view as parity. But the dollar index looks primed to make a move higher. I think it is. Not saying it's going to. It's all going to be figured out on Wednesday. Either the market's going to be disappointed with the Fed, and the doves aren't going to get what they want, and the dollar index has an opportunity to rally, or we can reverse here from these levels that we've really struggled with over the course of the last year. I mean, you look back since November of last year, anything up in the 97.5 to 98 range, we failed. And so this could obviously set up for another failure. I personally will be ready to play either side of the dollar come Wednesday. Now, there's another position that I've personally been in, and I've been trading it, and I want to take you over to the dollar Mexican peso. If you look at the dollar peso, actually, let's go over to the weekly chart. The weekly chart, we're at triangle support here at 19, and any dip below 19, we've seen buyers. Even this last week, we would dip to 1898, 1897, and buyers would come swooping in and push us back above 19. This is really key long-term triangle support. Now, because of the Fed on Wednesday, if we do have a disappointment and the Fed is not as dovish, and then the dollar rallies, you could get a double whammy here in the dollar Mexican peso going into this next week. And the reason why I say that is because we're near support. If the dollar gets a lift on Wednesday because of the Fed, we're going to rally right off the support. But also, what's going to happen is you're going to see if the doves are disappointed and the Fed is not as dovish, they're a little bit more hawkish than the market wants, then what you're going to see is you're probably going to see stocks come off of resistance. Now, let's take you over to the daily chart here. The S&P has been strong, and we're right up against, obviously all-time highs, and we're just nudging our head up against this resistance here. But what you'll notice, and actually let me take you over to this chart because I'll draw it out for you guys. What you'll notice is this is a daily chart, right? You see this trend line here? We keep knocking our head up against this trend line, and in my opinion has been, well, we're above 29.62. You got to stay bullish. That's fine, but we keep knocking our head up against this trend line and then coming off of it. Well, if the Fed does disappoint, okay, and the doves, right, and they're a little bit more hawkish, the dollar strengthens, stocks would actually show a bit of a reversal here. We might be up at 30.30 or so and start to come off again. But if stocks come down, the double whammy that I'm talking about is that you'll get a factor of the dollar strengthening, right, against the peso, but you'll also get weaker emerging market currencies if the stock market goes a little risk off. So, like I said, if the Fed disappoints and they're just not as dovish as the market wants, stocks should come down, the dollar would rise, and the dollar Mexican peso is really poised off of really key support. And frankly, if we break above this 1920, 1925, as you can see all this like resistance zone through here, right? We start breaking through that resistance. That's going to be a pretty big move, in my opinion, that could take us right back to 20 on the US dollar Mexican peso. And quite frankly, it could go even further than that too, depending on how risk off the market got on a disappointing FOMC. Anyway, next week I'll be around and on the Face webinar each and every morning with you guys. I wasn't around last week because I was traveling with my son. I am back in town, and so I'll be keeping you guys up to date on every morning on the free Face webinar. So make sure you listen in, because Dale Pinkert, Forex Stop Hunter, our host, he has a great webinar every morning. We have a lot of great talent, traders, analysts, people that you see on CNBC, great interviews that come in every day. So make sure you're listening in, and this way you can get my fresh thoughts each and every morning throughout the course of the trading week. And guys and gals, if you found this video helpful going into this next week, do us a favor. Click the thumbs up button on YouTube. Give us a thumbs up, because the team that works behind the scenes to put this all together for you guys, they love it when you love the videos. So we would appreciate that. And make sure you subscribe to our channel, so in case you miss one of our interviews, you can listen to them on YouTube when they're posted a couple hours later after the fact. So guys and gals, my name is Blake Morrow with ForexAnalytix. I hope you have a great trading week. I'll see you tomorrow morning on the FACE webinar. Have a wonderful rest of your Sunday.